Let's take a look at Dogecoin from this week's article on Brave New Coin. So first, a bit of a mea culpa. What you're seeing here is the GitHub commits. So these represent days. On the y-axis here, the x-axis is basically the number of changes in the code that were added to GitHub on any given day. So this is for Doge. And again, when I look at this at face value, I'm thinking, no one's developing this, right? There's no commits. There's no commits. Nothing's being changed. Nothing's being written. Well, come to find out, much like Litecoin, the work for Doge isn't necessarily done on the master branch, or it isn't merged with the master branch. So it's hard to actually dig through and find this, at least to somebody who's not native to GitHub or doesn't use GitHub. They've had 9 full releases over the past 2 years, so there's definitely development being done. It just can't necessarily be seen on the main GitHub branch. Looking at Doge's hash rate, we basically wouldn't have Doge. Doge would not exist if not for the merged mining initiative with LTC. So you can mine Doge while you're mining LTC. And because of that, you can see the Doge hash rate mirrors the LTC hash rate almost exactly. The LTC halving was sometime in August, and hash rate peaked just before then and dropped all the way back down. Very similar here to Doge. It's kind of stabilized at the low for 2018, for early January 2019. My guess is this is where like the highly efficient miners are as far as what they can handle at a break-even price at X hash rate, X difficulty, X electricity costs, X mining rig, whatever. So if it goes below this level, then I'd probably get concerned regarding security for the network. Although let's be honest, it's Doge, so you shouldn't have billions of Doge. Doge is like an entry level. Learn crypto, play around with it, send it, figure stuff out sort of currency. It's not a proof of value, or it's not a store of value currency. It's more of a medium of exchange, crypto for dummies type currency in a way that's good for the community. And we need this sort of thing. We need sort of practice versions of blockchains and that sort of thing. Not to diminish any development or the community at all, but that's how most people view Dogecoin. They're not, trading it aggressively. They're not buying it aggressively. Looking at transactions per day in the line here, the fill is average transaction values. We can see the transactions per day have essentially held at around 30,000, which is quite a lot for an altcoin. This is more than a lot of the higher cap coins have on their network. This is probably, again, because of the mining stuff with LTC. This is probably inflated a little bit. It's questionable. Do mining transactions represent organic activity? Should they be curated in some way? I mean, it's on-chain, so if it happens on-chain, it's a transaction. But it's hard to know what this really represents. Does this represent purely mining activity, or is this actual commerce in some way going on transaction-wise? We can see that the average transaction values continue to decline, kind of returning to this early 2017 levels, breaking lows here. Again, this is probably mining related. You're getting a lot of little transactions and not a lot of high value transactions. This is NVT, the line here, and the fill is active addresses. And active addresses actually look decent in that they're above 2017 lows. They're above historic highs even. Again, probably mining related, so hard to really say what this represents. NVT is an inverse metric of economic utility. So what you want is you want NVT to be low like this, like this. You want it to be all the way down here. It represents a high number of transactions at a high value, which typically points to a bullish price, robust economic activity, on-chain use, that sort of thing. That's what you want to see. So to see NVT at all-time high is pretty bearish. To see it coming down from all-time high leans bullish, but again, it's above its historic highs. It's in this upper third, upper fourth of the historic range. You want this at least below 40, below this local low. You can see how the network acts very different sub 40 on the NVT. You can't necessarily compare NVT from chain to chain, but it is pretty useful to compare over time on one chain specifically. This is MVRV, which is a measure of market cap versus the realized cap, which again is a representation of when coins were last moved, what does that value represent? So you want MVRV to be low, and it's definitely pushing lows. It's not like at a multi-year low or anything, to represent undervalued economic activity. MVRV at highs just says that the market cap isn't supported by the economic utility, whereas MVRV at lows says that economic utility dominates the actual supply. So just like anything, if transactions are increasing, if daily active addresses are increasing, if average transaction values are increasing, this typically increases price, which is why MVRV as a measure of economic utility, much like NVT, helps illuminate whether or not a chain is undervalued or overvalued, comparing its market cap, comparing the on-chain data, that sort of thing. So it's definitely on the lower range of the past few years. I would like to see it go a little lower. So this is BNC's breakdown of trading volume per base pair. So Doge USDT, Doge Turkish Lira, Doge BTC, etc. And to see Turkish Lira so high up in here is interesting because we don't see that on any other coin virtually. We sometimes see Asian base pairs at the top here, for instance, KRW Korean won or CNY back in the day, JPY, that sort of thing, for very specific pairs, very specific coins, not across the board. So you're not going to see Turkish Lira volume up here on anything else. I don't know how much of this represents fake volume or goosed volume, not real volume. But it's interesting that it's a substantial amount of the trading volume here for Doge. I'm actually even surprised USDT has this much volume. Most people who are trading Doge look at Doge BTC. So looking at that pair, Doge BTC on Poloniex, this is the weekly chart, the only chart that really matters for Doge. And this is why. Historically, anything between 100 and 120 is a heavily overbought zone that typically sells off. Anything between 15 and 25 sats is typically bought up. So if you just treat this as an oscillator, buy zone, sell zone, it's pretty clear what's happening here. It's been in this range since 2014. Okay, this is a 6-year range. Do I think it's going to break 100 on the first attempt? If it reaches 100, I do not. What you need to see when you have any range of anything, you need to see a reaccumulation period at the highs to establish the new norm. You can see this never happen. Anytime it reaches the high, immediately sold back down, immediately sold back down. Another thing worth mentioning is the VPVR volume profile of the visible range. You can see that the point of control or the mean is around 40 sats. So if it's above 40 sats, you can say with a pretty high degree of certainty, it's going to try to make a run at 100 sats. I can also be pretty certain this isn't going to zero anytime soon, just because of the amount of volume on the underside of this. And just looking at this on the weekly, you can see there's an Adam and Eve attempt or a W double bottom attempt here with 40 at the horizontal resistance. All the more reason why 40 is a key zone for any bullish momentum in the future. Another thing about Doge is it tends to represent a weather vane for the altcoin market as a whole. So if altcoins are bullish, you're going to see Doge pop above 40 fairly quickly. Another way of saying that is if Doge pops above 40, altcoins should be bullish. Looking at the weekly cloud, you can see a little bit of a different picture. So I'll first talk about the RSI on the bottom here. It's at 50, which is smack dab in the middle of overbought and oversold. So it says that all the momentum is reset and it's ready for the next decision point. This is as evened out as it can look from the RSI's point of view. So plenty of room for upside, easily plenty of room for downside. Doesn't help you much. Looking at the cloud though, you can see there's a bit of a TKC clamp here. This is a multi-month, maybe even 6-month, just accumulation zone. If I see this on anything in a vacuum, I get excited because the trade is obvious. Again, if it breaks above 40, if it breaks above 35, then it's go time. The near-term target is 55 based on the Kijun, based on the cloud resistance. After you break into the cloud, then you can trigger this edge-to-edge trade. You can go from 40 to 60, but you can see it's never really quite been above the weekly cloud, ever. This is a really high time frame for an altcoin, but because there's so much history, going back since 2014, you can look at the weekly cloud like this, and you can take these entries seriously, I think, because you know that 100 is the target. at any given point. You know that 30 is the support, 25 is the support at any given time. So the risk reward, just from that point of view, is pretty high for a long trade here. And looking at the daily chart, it looks even better to me because you can see the cloud is zeroed out as well. The cloud itself, there's no resistance here. It's all burned off as price has reaccumulated in this range. The 50, the green, and the 200, the red here, have flattened out as well. Another way of showing a momentumless range. So all of these indicators are telling you the same thing. 50 on the weekly RSI says it's flat. 50 and the 200 EMAs telling you the trend is flat because the EMAs themselves are horizontal. There is no rate of change at all. The cloud itself is zeroed out. Again, no rate of change. So anything above 33 would be a long entry signal on the cloud. Eventually that'll trigger a 5200 cross on the EMAs. And the last thing I'll mention is that Q2 has been bullish for all of crypto historically, going back since 2010. So if Doge does have a run, I expect it to happen in the next 3 months, and the TA supports that.